Hey, what's up, guys? Happy Friday, and welcome to another episode of the Daily Crypto News with myself, Vibin, and my brother, Scott Tripp, aka the Crypto Beast. As you guys should know by now, we like to jump into a couple of the crypto headlines, bring them to your attention, see what you guys think about them, and then just have a little discussion about them. But before we get started, just like every other day, we like to go over to the Crypto Beast, get the daily market sentiment, kind of see what he thinks is going on based on off of some of the things that he sees between social media and charts and things of that nature. So without further ado, we'll let Scott take over.
Hey, yeah, I'm watching Bitcoin right now. Like, what is it at? 44. Somebody said it touched that 45 mark today. That was my big hold all, but it did fall below 45. It didn't hold it. So I guess I'll just wait and see. I'm still neutral until it's past that 45 mark, and then I'll feel a lot more confident.
Yeah, so I think it's still fair to say that the market sentiment is still pretty much neutral. The last like 4 Fridays we've been seeing dumps on Fridays, and to see the market still holding up in a sense here on Friday is pretty good. So I like that neutrality. But without further ado, we'll go right into the first headline today. Mine is going to be coming from Cointelegraph. As you can see here, the headline reads: "Beware the Bitfinex well. New 45K BTC sell wall appears amid worries Bitcoin could retrace." So BTC was up nearly 5% in 24 hours at the Wall Street Open on March 25th, but a new warning sign was given traders cold feet. So Bitfinex well flips to sell mode. So data from Cointelegraph's Markets Pro and TradingView confirmed BTC USD hitting a multi-week highs of 45,137 Friday as Wall Street got underway, as 45,000 reappeared for the first time since the start of the month. However, so did all too familiar behavior from some of the Bitcoin's biggest investors. Attention turned to the exchange Bitfinex on the day, a platform famous for large volume trades or whales guiding short-term price action with their trades. As noted by popular trader Pentoshi, the entity which had purchased BTC at the last low near 34,000 had now put a significant ask position beginning at 45,000. So we'll talk more about this in the show a little bit later, but as you can, basically what they're saying here is that, some of the whales, if you get volume alerts, I get volume alerts. So I'll see that, whales are taking money from or taking BTC. It was like a whale who took like over 1,000 BTC yesterday and took it from his cold wallet and put it on the exchange. And I said something to you about that, Scott. And what it is that when you start seeing these whales take from their cold wallet and put it back on the exchange, you better believe there's going to be a sell wall coming up. And that's what's happening right now. So kind of like what you were saying, Scott, you heard it hit that 45,000 this morning and then retraced. This is probably why, because some of the whales are stepping up with their Bitcoin and say, hey, look, I'm going to cash out here. And there's nothing wrong with that. If they're in a position to want to take profit from where they bought in at 30, then hey, more power to them. And we just got to make sure there's respective volume on the market to counteract and buy the Bitcoins that are selling.
And they might want to start the pressure on that 45K. And I've seen them do it before where they lift it at the last second just in order to drive up the volume really high. It's not something that doesn't happen a lot. It does happen a lot, like when it comes to trading and stuff like that. So we'll just have to wait and see what happens. My first article is, I just got to pop it open. Sorry about that. I was just looking at the BTC price before we started here. So Israel's largest bank, founded in 1902, enables crypto trading to its customers. Israel's biggest bank, Leumi, which was established as far back as 1902, will become the first Israel bank to provide crypto trading. The bank's digital platform, Pepper Invest, announced the news on March 24th, following a partnership with US blockchain Paxos. For the time being, only Bitcoin and Ethereum will be available to Pepper Invest clients to buy, hold, and sell, and totaling at least 50 shekels, or the equivalent of $15.49 at the time of publication. According to the statement, regulatory permission is still waiting, hence no launch date has been set. However, it did state Pepper will collect tax according to the guidelines of Israel Tax Authority so that customers will not need to manage tax complexities. Additionally, it revealed the service would remove the hazard associated with downloading a digital cryptocurrency wallet. That's funny. With Pepper, users will be able to trade cryptocurrencies at competitive pricing, making the first banking platform in Israel and one of the few in the world that offers this service. While customers of Bank Illumi will be able to use the service in the near future as well. But I mean, it's like I stated before about these banks getting involved in stuff in it. They're not going to actually physically give you the currency. It's one difference. A wallet is pretty secure, in all honesty, as long as you're not opening fishy emails or doing something silly.
Connecting your wallet to links and things of that nature, right?
Yeah.
Yeah, it's one of those things, Scott, that we talk about a lot, is that, it's okay to see the banks get involved, guys, but this is at the point where the people, humans, are trying to elevate themselves and become our own banks. And I think that's something that I always tell people, man. I don't care if Bank of America gets involved, Wells Fargo. I don't care. Like, for me, I'd rather bank myself than to be banked. So let's look at, so we'll keep paying attention to what's going on throughout the year. But right now, we'll jump over to my second article. It's going to be coming from CoinSpeaker. As you can see here, Russia approves Bitcoin payments for oil and gas. So we kind of talked about this a little bit yesterday with the possibility of them doing it, especially with the ruble falling as much as it has since the sanctions have been imposed from different countries. But the chairman of the State of Duma Committee of Energy, Pavel Zavalny, said that Russia will now accept Bitcoin payment for oil. He made the announcement at a press conference on Thursday. However, Russia specified that only China and Turkey could pay for all oil with Bitcoin. So economy of Russia has thrived fervently on oil and gas for centuries. So much so that the country is referred to as an energy superpower with the world's largest natural gas reserves. The oil and gas industry makes up about 40% of the budget revenue. Having faced sanctions from virtually all quarters that supported this economic growth, Russia's economy has nosedived. Trades of the Russian stock market have equally stopped, reducing the ruble by half its value, thereby bleeding against the dollar. Bitcoin hit 118 for the first time since early March. The digital coin has seen an upward movement after the announcement. The cryptocurrency managed to reclaim the mid area around its current levels and could see further upside in the short term if bulls can sustain the momentum. So let's see why they chose Bitcoin. Previous to sanctions, Russia's restrictions on cryptocurrencies were inactionable, contrary to what it proposed now. Russia planning to accept Bitcoin acceptance for oil indicate that Putin's war is nowhere near an end. Until the Western society strengthen their policy against Russia, nothing will stop its gas producers from Bitcoin payments. The matter was discussed on the agenda at the meeting between Biden and European leaders on Thursday in Brussels. The West will dissociate every source of potential growth in Russia. They range from technology, supply chain, and human resource. So this is really interesting that they chose Bitcoin. Why? Because they knew Bitcoin could not be stopped. They know that Bitcoin can't be stopped by U.S. regulators. They know that it can't be stopped by all the people who are imposing sanctions on them. So I think this is a really smart play on their part in using a cryptocurrency. And to me, I think this is good for cryptocurrency because it's showing people around the world how the currency can be one currency, doesn't need to change. A cheeseburger is going to cost 0.0007 Bitcoin forever, no matter where you are. It's still the same price. So it kind of puts us all on the same economy level when it comes to the dollars and things of that nature. So I think it's still spreading the word about crypto at the end of the day.
Yeah, in the end, I think the States has something up their sleeve when it comes to getting some of these Bitcoins back, though. Like we seen it with these hackers that stole Bitcoin. They were able to seize them. So they
tracked them, but they only seized them by arresting the people. Like I haven't seen any cases where they didn't arrest somebody and was able to stop the Bitcoin from doing. It's too decentralized. Like I guess
we'll wait and see what happens with Russia when they try it, I guess.
They're definitely going to try something. There's too many countries posing sanctions for them to get away with all this.
they're in rough shape right now.
Hey, here's the funny part, Scott. I don't know if anybody else caught this out of that whole headline, but they said that only Turkey and China were allowed to pay for oil and Bitcoin. If you guys remember, there's no such thing as Bitcoin in China.
Yeah, I know.
So we'll play it from there. Like we'll play it. We'll definitely got to keep an eye out for what's going on.
Yeah. So my next article is Polygon Matic teases 2 massive product releases shortly. Here's what it suggests. In a recent Twitter post, Polygon teases its community on 2 massive products set to be released shortly. It hints at a multi-chain ecosystem, leaving the community to guess what it could be about. As the community keeps its fingers crossed on incoming developments, it may be useful to look back on the targets the Polygon network put out at the start of 2022. In a blog post at the very start of the year, Polygon recalled the highlights of the previous year, 2021, while announcing key targets for early 2022. Here it speaks about the EIP 1559 bringing a much requested upgrade to the network that will introduce the burning of Matic tokens and better fee visibility. It also indicated that Polygon Hermes and Polygon Matic might launch their public testnets in the second and third quarter, respectively. The year 2021 saw Polygon add 6 new products: CDK, Avail, Hermes, Nightfall, Maiden, and Zero, with its focus on ZK, Zero Knowledge Cryptography. In January, the London hard fork arrived on the Polygon mainnet, thus enabling the burning of the native Matic token and better visibility while taking its cue from Ethereum. Polygon recently announced the groundbreaking news that it will be selected as official blockchain platform of Swiss city Lugano. The city of Lugano will develop its blockchain infrastructure with Polygon assisting in the process. Lugano, the largest city in Switzerland's Ticino canton, has declared Bitcoin and Tether de facto legal tender together with the city LVGA points token. In what may not seem positive, the Polygon blockchain suffered a network outage earlier in March that caused Hamidel to stop functioning, which necessitated a hard fork. But I mean, at least they did the work to open it back up. So whatever. It is what it is. All these projects are going to have small issues and things. It's a part of a growth of a project. So when it dips because something like that happens, just not financial advice, but probably buy back in.
Yeah, I mean, Polygon is one of those things, Scott, that we talked about a lot over the last year. We've seen multiple partnerships form in 2022 and the end of 2021. And what I take from it is when you look at these ZK rollouts, these zero knowledge rollouts that they're doing, man, they've caught a lot of traction. I've started looking into ZK rollouts a lot. It's been one of the most popular things in 2022. And I love what Polygon's doing. I'm definitely going to keep paying attention to what they have coming out in the future. But to go over to my last article for today, guys, we're going to jump right over here to CoinSpeaker. As you can see here, the headline reads, decentralized assets can bring more confidence to investors amidst growing inflation. So the rate of inflation in the US and many other parts of the world continues to rise, given the effects of the COVID-19 pandemic, global warming, the war in Ukraine, and other factors. By January 2022, the inflation rate in the US stood at 7.5, a quick jump from December 2021, when it was at 5.9. Stocks and fiat money, like the US dollar and national currencies, are highly affected by inflation, losing their value as more people are attempting to sell their shares to make ends meet amidst the increasing cost of living. As an investor, your confidence is likely to go down, especially if your money's tied to the growth of stocks. Before figuring out how DeFi assets and tools benefit you during inflation, first you need to understand what inflation is. We won't really go over that. Hedging against inflation, currency instruments such as Bitcoin are regarded as deflationary assets. As an investor, you can bank on them to hedge against inflationary financial markets. Contrary to traditional markets, DeFi tools are hard to manipulate through overprinting or interest rates fluctuations. For example, the supply of Bitcoin and all the cryptocurrency trading investment platforms and will never surpass a constant amount, which is set at 21 million. This limited finite supply helps cryptocurrency and other DeFi assets resist inflation. So how cryptocurrencies hedge against? So many investors buy cryptocurrencies because they are promising investment tools, which can help investors hedge against risk and serve as good alternatives to fiat stocks, shares, and traded investment assets. Crypto diversifies your portfolio. So this article is pretty interesting, Scott. I liked it because basically what you're talking about is how people are using DeFi and other decentralized assets to hedge against some of the things that's going on with the inflation. We know inflation, number one, is up high, but even the numbers that are there are skewed. I think that they're even higher than what they project right now. So to see people starting to catch wind, and you're starting to see more news about people getting into decentralized assets, I think we should start seeing some new volume enter the market as the inflation grows, especially.
And then I'm just going to share this one. Last article, 230 million SHIB burned in the past 2 days. Destroyed 168,944,352, destroyed in a single transfer. SHIB-born reports that the SHIB Inu army continues to get rid of its meme tokens for good by locking them into addresses where they cannot be withdrawn or otherwise spent. Recently, the SHIB army seems to have doubled its efforts in destroying Shiba Inu coins to diminish the circulating supply of the second largest K9 crypto. According to data accumulated by the aforementioned Twitter account from Etherscan on its website in the past 2 days, a total amount of more than 230 million Shiba Inu have been burned. The largest transfer to an Inferno wallet here carried more than half the total amount of 168,942,352 meme tokens. As it's seen on SHIB USD chart on TradingView, Binance since March 24th, the second biggest meme token, has increased in price by 4.88%, rising from 0.00002505 to 0.00002543 level. Earlier in the block data agency reported the profitability of Shiba Inu has shown growth to 41% after a slide to 35% previously this month. On the same day, an anonymous whale acquired a staggering, that's a lot more, that would be like
200 billion.
200 trillion.
It's 200 billion.
Or 200 billion, yeah, 200 billion, 588,182,473 SHIB for almost 5 million, with the amount added to this previous purchase made 6 days ago. This wallet now holds a total of 3,942,000,000. Oh no, that's 914 billion. 9 billion. Holy, that guy is a major whale. Anyways, but yeah. That's good news, and I'll let you finish off with the trading view in that for the markets, just because we got the news in a couple of minutes here.
So yeah, we keep seeing the whales accumulate while there is accumulation zone, as Scott was saying. So without further ado, we'll go over to the last part of the session for the day, guys. We're going to jump over to trading view, take a look at the total crypto market cap and some of the things that we like to take a look at as far as dominance factors. Right now, we see the total market cap is at 1.964 trillion. Still seeing that a little bit of rejection from that $2 trillion mark, but if we lose this little support here, we're gonna lose all the move that we pretty much made over the last couple of weeks. But we'll look at Bitcoin dominance right now. Refresh here. Bitcoin dominance is at 42.83. So you see this thing has started shooting back up here. So as that happens, typically the Ethereum dominance may be falling a little bit. Yep. So we got Ethereum dominance coming back at 19.07. Again, guys, the market's still just playing around, doing a little bit of its own thing, kind of giving us a little bit closer highs, but we just got to pay attention while it's still overall mostly neutral, in my opinion. But yeah, that's all the time we have for today, guys. We appreciate you guys tuning in with us. There's no announcements today. We're off for the weekend, but on Monday we'll be back. And we also have a Twitter space on Monday if you guys can attend. So appreciate you guys tuning in, and until next time, peace out.
Peace. See you guys later. Have a wonderful day.